the market is going to come back up to have equal balance. Sorry, that very quick. So what happens right now is that there's a 3-minute fair value gap right here. You guys see that? Everybody's following along?
Yeah.
Okay, so there's a 3-minute fair value gap right here. So we had step 1, accumulation. Step 2, manipulation to the downside. What happens is when we're manipulating, you have to look at where is market hunting liquidity. Liquidity is pretty much, you see these big long wicks? These are all liquidities. So market is hunting all these liquidities. As market pumps, they leave behind liquidities that market is going to eventually come back and fill out. If you understand that concept, you're going to understand how like the market works pretty much. So what I did is strictly mark my liquidities that got taken out, that didn't get taken out. So this right here got taken out by this right here, right? You can clearly see this liquidity, it got swept by here, right? So then there's another liquidity here. Now this is the recent liquidity. This liquidity got swept by here. So the most recent liquidity is here, and the most recent liquidity is here. So what I'm waiting for is market to take these two liquidities. So when accumulation happens, price action needs to take some sort of liquidity before it does the reversal. So with the Bollinger Band, you guys could clearly see that we're oversold, yeah? So when you're oversold, like I said, the market tends to go back up. In order to confirm that, you find a fair value gap to get inversed. So what happens is, if you look closely, right, we got inversed right here. So this confirmed, this one didn't, but this one confirmed, and this confirmed. So you had, I always tell everybody, filming drummer, you already know this too. I tell everybody in the Discord that when there's 3 to 4 candlesticks that confirm when we get a closure above the market, above the fair value gap, the market, it will be respected at least 90% of the time before it does the move that you want it to do. Where I like to tell people to put stop loss is at the lowest of the wick, right? Which would be right here. The reason why I say that is because it gives you room for it to breathe, right? For it to breathe and keep it going. For example, if you entered here, right? This specific one, because this is the 3 to 4 candlestick that closed. If you specifically entered here and you put your stop loss at the fair value gap right here, you could have easily gotten stopped out. Which is why I tell everybody, give yourself some room and a breather for the market to do what it needs to do, right? If you don't give it room, it's not gonna, the play won't ever work out. Because then you'll get stopped out and you'll be like, damn, I was right, it was gonna go up, right? So I always tell everybody, give yourself some room. You don't necessarily have to put it here. You could put it at the lowest of the wick on that fair value gap. So even if you put your wick right here, you put your stop loss there, you enter your position here, you would have never gotten stopped out. So that's how I tend to play. And if you looked at this, if you entered from here and you took it like this first pump automatically was a 92 points. So on the manipulation, on the distribution side, you look for where is market hunting liquidity. It's the same thing when market is hunting manipulation liquidity, market hunts distribution liquidity. Just like I tell you guys, liquidity is what market hunts every single day. The highest liquidity you guys could see is right here, right? This form of liquidity that was left before this drop. So market is hunting that liquidity. That's pretty obvious, right? Is hunting all these equal liquidities that are left here. You could even check in the higher time frame. Look on the 5-minute, look on the 15, right? Where is market hunting liquidity? You could have easily realized that the liquidity is here, there's liquidity here, here, here. These are all liquidity that market wants to take out. And what does it do exactly? It takes it out. So when you go back down to the lower time frame, you could target that liquidity, or you could target the near side liquidities, which is right here. These are the equal lows. These are equal lows liquidity. When the liquidities are literally the same level, this one and this one are the same level, they're more than 90% of the time it will get taken out. Literally more than 90% of the time it will get taken out, and pretty much that would be your TP1. So this would be TP1, and then your TP2 would be the second TP right here. This would be your second TP2 because it's on a higher time frame. So what I would is when you entered here to the first TP, that's 95 points, right? You could sell some of your position, you could hold for a runner if you like. However, you could realize that this little pump right here is already 95 points. Some people like to settle for less, meaning like if they see 40 points, they'll take it. They sell, they'll exit. If you want to hold for the full TP, you could hold for the full TP because, like I said, 90% of the time it will hit. However, if you like to take your profits earlier, by all means, you're fine because end of the day, we want to be green. That's the whole objective, to be green, right? So if you got up to here and you sold some, that's great. If you want to hold for the full TP, you could have gotten yourself an extra about another 90 points. So almost 200 points just around this single PO3 that occurred right here, right? Just a single one PO3 model on Friday caused 200 points right here. However, if you guys realize on Friday we played this drop, and we caught it perfectly. We made, I believe, like $600-700 on this drop. We caught it perfectly. We exited right away because I realized that it was the manipulation. That's why I told everybody to exit the position out of it, right? So even if I took it out, like you guys could clearly see, look, if I took everything out, you see the accumulation right here, right? You can see it's in a linear fashion, is accumulation. Manipulation to the downside took liquidity. There's a fair value gap right here, right? You can see from this point to this point doesn't touch. Those are liquid. That's a fair value gap. So what you want to see is that fair value gap get disrespected. You enter your position and you target your near side liquidity. That's one PO3. That's how I trade, right? The second PO3 that happened on Friday was another one. It was a very interesting one, but it did happen, right? You guys could see this whole entire range. Look at this beautiful accumulation that we had. After the first PO3 we got, then we formed another accumulation zone, right? When you look back, you can see that first PO3 gave you to the upside. Second PO3 is doing the same exact thing. So we don't know which way the market is going to be headed. If it went up, it would have easily came back down. So now what we're waiting for is to see, like I tell you guys, when the market pumps up, it leaves what behind? Liquidities. So liquidity here, there's liquidity here. There's also equal liquidity that I tell you guys that the market will obviously hunt, right? Market will be hunting these two liquidities right here. This is more appealing to me than this, than this, than this. Because why? Because they're at the same exact level, and market will 100% take that out. 100% of the time, market will take out equal liquidities no matter what. And we've seen that several times over and over again. So step one, I identified my accumulation zone. Step two, where's market hunting liquidity? This is the manipulation zone, right? Market is going down. So okay, so market is going down. Let me mark out my liquidity. I have liquidity here, the equal ones that I'm 100% sure that it will get taken out. It got swept. What is my bias? If I'm getting manipulated to the downside, right? If you have manipulation to the downside, you expect price, smart money to reverse and go to the upside. However, the only way that works is if you find a fair value gap or a change of character. Same thing is true is when price action accumulates, goes up and then comes back down. That's another form of PO3. So you accumulate, manipulate down and go up. You accumulate, manipulate up and then go back down. That's a smart money concept reversal. So for example, in this one, right? You guys could see that we accumulate in a zone, right? So now my bias is where is my fair value gaps or where is change of character? So what you want to see is a fair value gaps. I prefer fair value gaps to get disrespected, so that's how you enter your position. So on fair value gaps, you guys could see there's a 3 minute fair value gap right here, right? Because you can see there's no fair value gaps that left during the manipulation. You can see there's no gaps. Even if you look closely, there's no gaps. This is the only gap that was there. What I wait for is confirmation, right? A lot of people would have entered here, right? Because they saw these candlesticks, bullish candlesticks come up. But like you guys can see, we reject here. So if you entered automatically thinking that the price action was gonna go back here without any some sort of closure above confirmation, and you enter the position right here, you would have gotten automatically stopped down and probably lost around, because these candlesticks are heavy. So you would have lost about 100 points. So you would have lost a very heavy amount. If you went with like 5 or 10 contracts, you would have lost a lot. At least $400 or $500 you guys would have lost just here alone. So what I like to tell everybody is wait for confirmation. Confirmation is this right here. You see how closure above? That's confirmation. Stop loss here, I would like to put out the second lowest of the wick right here, not on the fair value gap. Because sometimes what happens is you guys could see, right? Sometimes you guys could see how price action just comes back to the fair value gap and then shoots right back up, right? Sometimes it does that. Other times it won't do that. It will literally just stay around the area and then go back up. So if you got your confirmation here, right? This is your point of interest, right? If you got your confirmation there, all you do is take a buy position, right? You take your longs from here and you target liquidity. Like I said, liquidity again, where is it at? Right here. This is an equal liquidity. There's liquidity here and here. That would be your first TP. The second TP is you look on the higher time frame. Where else is market hunting liquidity? There's so much liquidity that's resting up here that market wants to take out. So the first TP would be the near side, or usually it's on your accumulation zone. That's where the TP1 is. So if you put your stop loss at the wick here, right, and then you take your TP to the nearest one right there. That's about 114 points, just strictly off of that. That's why I tell people, let the play come to you. Do not chase the play, because for example, like I said, if you guys chased here, you guys could have easily just gotten stomped out, 100 points, destroyed again. And think about it, that's the liquidity that we mentioned right here. This acted as a support for us to go back up. Usually what market does, whenever it does a wick like this, a big wick, usually what it means that it's coming back to retest, put in the fair value gap, right? Is respecting this fair value gap, if you could also see. It's also respecting this fair value gap, right? You see how it never broke? Is respecting the fair value, and then it took more liquidity, and then it had a higher chance of it going back up. And it's above your 20 MA, right? If you wanted this to run, you could have easily let it run. This would have been 200 points again. So it would have been back to back 200 points. So that's 400 points for the day. You would have been done. You know what I mean? Um. So and do you guys have any questions on that? That's the PO3 model, by the way. Nope.
No, easy peasy.
Easy peasy. Anybody else have questions? All right. So I'm assuming everybody understands that. That's pretty much how the PLT works: accumulation, manipulation, and then distribution to either whatever side it's supposed to be going to. So my bias for this week is that I'm gonna look at the daily time frame. Right. There's actually a nice gap that I want to see price action disrespect, and the gap is right here. So if you guys look on a higher time frame, my boy Zilfer always tells me look at the higher time frame, so that's what I've been doing. So looking at the higher time frame, there's a bullish fair value gap right here. What I like to see is price go back up, right? Because you could see right here, right? For example, right here, you guys see Bollinger Band is oversold, right? On the daily time frame, we're oversold as hell. What I expect is price to go up, take some sort of liquidity, which is right here, respect this fair value gap, and shoot right back down. It either happens overnight or it happens, like during New York session. I want to see price action go back up. That's the perfect idea. Like I want to see price action go back up before it comes back and disrespect this fair value gap. All market needs to do is grab some sort of liquidity. When market grabs some sort of liquidity, it has a higher chance of it coming right back down. And you guys could see the trend. We're on a bearish trend. Like if you guys could see, look, we broke character, we closed below this character right here, this low right here, and we just want to see price action come back down. All market is doing right now is just hunting these liquidities. That's all market is doing. It's not doing anything else. Let me double check for you guys. Let me get this out. So right here, right? So that's my cue number one. This daily fair value gap, I want to see it get disrespected. What I have then is like now I'm gonna mark up my gaps. My gaps are right here. These are equal liquidities right here, right? Equal liquidities that I want market to take out. There's also equal liquidities right here that I want to see market take out. And finally, the last liquidity before this high was right here, this candlestick. So I want to see this liquidity. So I have these three liquidities marked point of interest that I want to see market either come back down to and take out. Because like for example, right? If you guys could see every day it does the same shit every single day. Look, market pumps, right? And then what did I tell you guys? It leaves behind. It leaves behind all these liquidities, like all these liquidities that market never took out. And what happens after that? Look, market took out this liquidity with this right here, right? And then market took out all these liquidities with this, right? That's all market is doing. Market isn't doing anything. Like there's a reason why market goes up, market comes down. There's a reason why, So if you could understand that, you could understand why market shifts up and why market shifts down. Like right now, all these liquidities, right? Since we were having an uptrend, look at what happened. It all got destroyed. So same thing is true. Same thing is true when there's upside liquidities that never got taken out. It will eventually get taken out because market needs to grab some sort of liquidity to do something, either whether it be going up or down, right? So my bias is still I'm very bearish for the day, like for the week. I'm still very bearish. We have a bunch of news coming in. Like I said, this daily fair value gap is going to be a key right here. This is going to be a key. It's going to be a very key level because look, we closed right above it. Look, you guys can see clearly, like this is a very key level. Look, we closed right below it and we opened right above it. What I want to see is I want to see a closure below it because then if we have a closure below, you understand how much form of liquidity we have to get taken out. We have so much. We have so much liquidity on the downside that needs to get taken out. This one, I don't like to get random liquidity. There's a reason why I target certain liquidities because there's certain moves. For example, this liquidity, why I chose this one, this black one, versus this one. The reason why I chose this is because this was the last point before market had a big run from here to here. Then it went big run right here and right here. Even this one, this is a form of interest of liquidity because look, market before this, the market was just running crazy right after. If market ran right after. What I want to see is a displacement back down, disrespect this daily fair value gap, and taking all these liquidities. And 99% of the time is going to happen. It's going to work. In the case of scenario of the upside of like going back up, there's a fair value gap right here on the daily time frame, right? No, actually, there's a daily gap right here now because we already opened on the day. So this one actually, this might be the play right here. So you guys might get it firsthand right here. So you guys see this daily gap. What I want to see is if we close above here, the 070, if we close the nearest liquidity, which is right here, that 460. 460 would be the nearest liquidity that I take. And that's pretty much it. Like that's all you guys should be looking for. Fair value gaps, PO3, and liquidity. That's all market does every single day. There's no difference on it. Is it good now? Is it good now? Okay. Oh, okay. Yeah, yeah. Nah.
Yeah,
What else?
fix your shitty internet.
But is it good now? Okay. So what I'm looking for now is that this daily candle right here. So I'm not gonna take any play until I see some sort of respect or disrespect. So then if we go above 060, what is it? 068? Let me see. No, 065, I'll take longs. If we go right below that, I'm taking shorts right here. And I'm gonna hold this short position because more likely that we're already in a downtrend. That I'd rather see the market go down than stay it back up. However, if the market wants to go the other way, I'm not, like if it wants to, then by all means I'll play the opposite side. Then also on the 4 hour, right? You guys could clearly see like this is also known as an order block. Like on the daily, you see as a fair value gap, but other people that trade they can see this is an order block. So we want to see if price action respects this or it doesn't respect it. And you guys could see there's clearly equal liquidities right here. So my bias right now is that either we go up, grab this liquidity, and then come right back down. And the good thing about this right here is like we're right on that 20 MA. So you want to see does price action respect or does it disrespect? Because when we went over here on the 20 MA, we disrespected it and we came right back down. So if that's the case and we close below here, I'm taking short straight back down to the downside, and I'm gonna target this liquidity right here, the 460. Because the same was true what happened here. Look, we went on the 20 MA, price disrespected and came straight right back down. We had fair value gaps right here, right? You can see we had fair value gaps. And then look, we had fair value and look what happens. We wicked the fair value gap and we came straight down, right? The same is true on any fair value gaps that are on a trend. You want to see it. You want to see a respect and go back down, not disrespect and go back up. That wouldn't be true, right? So what I'm thinking right now, that if the market respects this and it goes back, it'll take this liquidity and come right back down. And then worst case is if it doesn't and it closed below this 20 MA right now, I think we have some sort of rejection right now, even on the lower time frame. Yeah, see, we're already rejecting. Like if you could even look at the lower time frame. Like I would like to confirm on the five. For me, 5 minutes is the best confirmation. Like if I get a closure below, especially right here, like there's also a gap, guys. Like I don't know if you guys can see, there's a gap right here that we just formed before this pump. So that's even perfect because this is more than likely to get filled. So that's perfect. If it goes below here, the 943, take shorts. If it disrespects this fair value gap, you can take shorts all the way down. And it's more than likely that market will come back down to this price again. It could be just playing around and just be staggered here for the whole day. Like maybe do some false, like it'll stag here, make a little bit false, come right back down, make a false here, go back here, and do that until like maybe like London session, and then the real move will happen. Usually during Asia session, all market does, if you haven't traded futures for a while, but I'm gonna tell you guys straight up, Asia session for MNQ usually does this. It just accumulates like this. So you're not gonna get like right now. You're not gonna get the best move if you're trading this. You like this is not what I like to trade. I used to love Asia session before because sometimes big move used to happen. However, not all the time is that true. Like for example, now it's like look at this price. It's so slow. Like I'm not trading this. Like I said, it's flat. It's in a bearish uh fair value gap and it's just sitting there. Like I said, it's gonna probably just stay staggered around here until like some news that drop. Let me see if there's news dropping. At 2045, we have Chinese manufacturing PMI. That's around that's around 8, 9, probably around like 9, 10 o'clock ish. We'll have news. So what I could probably see is market probably just accumulating in this range, and then we could just either drop and then just continue on from there. Yeah. Some people like Roberto, for example, he likes to scalp the shit out of these. Right? He'll do like a quick scalp. If you know how to scalp, by all means, go for it. You could scalp the shit out of these pretty fast. You just gotta be like you can't hold on to it from. Don't have hope in this. Like just be in and be out. Asia session, be in and out. London session, same thing, be in and out. New York session, the only session that I would say you could hold your position for longer because it has an equal amount of like volatility. Asia, there's barely any volatility. Like whatever you're trading is just flat trading. London session has the most insane volatility you'll ever see, which is why people don't hold. They take that thing so fast and they're out. Oh, Eddie, you're recording? Oh shit, thank you, bro. I appreciate it. Send me the recording after. So like I said, what I want, what I expect price to happen is accumulate somewhere around Asia session. London session either takes a high or it takes a low, and then New York session will take Asia sessions low or Asia sessions high, and then one or the other. London's high or London's low, and that's it. And that would be the play for the day. So what I would say is right now we could just probably just wait because there's really no plays. Like if you're gonna play this, you got to be fast with it. Other than that, this is just gonna be staggered here for a while. Like we're not gonna have anything news because there's actually a red folder that's happening at 2045. I don't even know what time it is. That's probably like 10 o'clock or some shit. That red folder is for Asia, Tokyo or Asia session, somewhere around there. So that's gonna happen way down later, around like I think that's 9 o'clock. I believe it's 9 o'clock. So around that time, we'll have some news. We'll have some volatility. Right now, there's no volatility right now at all. Like this is nothing. This is not something you want to be trading unless you're doing like freaking 30 seconds. Like if you're doing 30 seconds, you want to be quick with it in and out. By all means, go for it, but don't nuke your account, right? Because remember, with Top Step, right? Everybody knows with Top Step, you guys have a balance and then you have a maximum loss limit, right? And then this is where you could check your charting history. I'm pretty sure everybody's familiar with this, right? Same thing. Even here, what is it called? Let me see. Even here, you want to put your daily profit target to like 1500. If you're on a combine, 1500, and I would say liquidate, and it will automatically this will pop out, and that should be your goal for the day. After you hit that, you're done. After you hit that, you're done. And then if you have more accounts, you can copy trade from here to here, right? That's pretty much it. So I'm gonna take a screenshot of my like day-to-day analysis of what I think the market is gonna do, and then you guys could interpret that and use that for your own like idea of how you guys trade. But like for me, I strictly trade fair value gaps, PO3, and liquidity sweep, like point of interest of where market will hunt. That's my point of view. Right now, on the daily time frame, like we're actually overbought. So we could, like I said, we could have a little bit of a rally and come right back down. When I see like you see how the Bollinger Band is like this on a down movement, usually yes, it does indicate an overbought. I mean oversold. So what market would tend to do is it'll go right back up somewhere and then just come right back down. So it'll take some sort of liquidity and come right back down. How I know it's a really good reversal is let me show you guys. When I see okay, this right this is a great this is an amazing way to just know that market is going to have an instant reversal. Whereas you guys see this is what I mean. Look, this right here. Let me show you guys something actually really important. Like this right here, right? You see these two candlesticks, guys? And then I'm gonna show you guys the very difference because I actually studied this for a little bit. I want to show you guys. Okay, you guys see this one and this one? The reason why this is a better candle because the Bollinger Band isn't on a downtrend. Usually, what this means is that market is just gonna go respect the fair value gap, right? Which it did right here, right? You can see it respected. It took liquidity because I'm on a daily time frame. So if you go down to a lower time frame, you can see market probably grab some sort of liquidity before it did a drop. So what happens is that usually when you see a Bollinger Band going on a downtrend and the candlestick closed below and then close above, usually means you'll get a little bit of a healthy pullback before the next leg down. How you know it's the next leg down? If market takes the recent liquidity of that Bollinger Band, which it did, and then compare this to the Bollinger Band here when it's like shifty on a linear fashion. The stop loss would be here, right? And you want to see if market does the same thing here. Does it come back and take this liquidity? And it does not. It respects it, right? You could automatically enter when it closes above. So when it closes within the Bollinger Band, you could take your position here, put your stop loss down here, and target near side liquidity, which is this and this. And you could clearly see just using the Bollinger Band with no, like literally, if you use a Bollinger Band with no theory and you just blindly enter, you're more than likely 60% of the time to get it in a very accurate manner. Like even if somebody that doesn't know anything about trading and they just use the Bollinger Band when the market is overbought, oversold, they could still make shit ton of money, right? But I use the Bollinger Band as a confluence, not blindly using it. But if somebody were to blindly use it, they could have still caught. Look how much point they would have caught this if they actually held this through. That's 957 points on the day. So if they held this through completely, they could have made shit ton of money on that. So this is why I'm saying this. When I see the Bollinger Band expand down like this, and I see a candlestick close in below, I usually expect the market to go back up a little bit, grab some sort of liquidity, and come right back down. Whenever I see like this manner, this is usually a high reversal, which I don't clearly you like clearly when you go back to here, like you guys could see like market is probably gonna take some sort of liquidity, and it's probably gonna come straight back down. So I don't expect this to be like people are gonna be like, oh, it's the market's no, I don't expect this to be a reversal. This is not a reversal. This is just a small time breather for the market to come back down. And especially if you look at the daily, look where we're below. Where the 20 MA is all the way up here and we're all the way down here. This is all it is, just a healthy pullback and we come right back down. So that's my take for literally this week and Asia session. So I have these marked out. These are going to be the play that we disrespect minute from here. This fair value gap, which is 547. We're going to target the 60 level, this 303, and then 1114. These three are the main levels I'm looking for. And then if it was to the upside, right, because market is supposed to be having a small rally. If we're below this bearish fair value gap on the 30-minute and come straight back down. Instead of taking the higher time frame and respecting that, it will probably take these lowers right here and literally just come right back down. So it will probably go up right here, tap this fair value gap, and shoot right back down and take all these lows. Usually, it's more than likely that 90% of the time is gonna happen. So I'd keep an eye on for that. And I'm gonna send you guys this chart so then you guys can have a nice have it like just to like look at everything and see how the market is moving. So I advise everybody have like the Bollinger Band into your indicator. Like for example, even here, like when market is oversold, easily like you could have caught a nice little play right here on the upside. Like this is literally a 200-point play if you just entered when it was closed in the Bollinger Band. It's always is 95% of the time is usually true. Like it's really accurate, but it's a live indicator. It's not like it's some BS indicator. It's actually a live indicator. So like even right here, when you're overbought, like you could see like we come right back, we closed in, and boom, right here, 142 points. Like I can go on and on. I can even show you like right here, we are overbought, right there, right back up. The same thing is true when same thing is true when you're oversold. Let me see if I can find. Oh, like when you're overbought here, you see how we went right back down. Like even here, like when you're overbought, come back into the range. Look at that, 900 points, right? Bollinger Band is one of those indicators that just seems to work because it's a live indicator. It goes with the market. If you guys think I'm lying, look at this. the Bollinger Band is right here. It will expand with the market. Like it will expand with the market. If the market goes up, this Bollinger will start opening up for it to go back up. You see how there's a big range? And there's a big gap that needs to fill right here, by the way. So like Bollinger moves directly with the market. And that's about it, guys. You guys have any questions? If not, I'm pretty much done. If you guys have any questions, just let me know. If not, I'm gonna post this chart and then I'll set up the plays that we're gonna take and we're gonna be looking for today. And yeah, that's pretty much it, guys. So if you guys have any questions, just let me know.